Yeah, good morning, everyone. I'm Kavita here. We'll start the call. So on Friday, U.S. markets ended higher. The non-farm payroll data, which came in better than expected. The total non-farm payroll employment increased by 254,000 in September month, against expected of 150,000 by the economists. The same number was 159,000 in the August month. Consequently, the unemployment rate fell to 4.1% from 4.2% in August. So this data reassured investors who were worrying about the economy may getting in too weak. Now, focus would now turn towards more cues on the interest rate cuts and corporate earnings in the coming days. Asian markets are also trading higher. China is closed today. Indian markets can also open in green and would remain range bound during the day. Now, I request the technical team to take the call forward.
Yes, thank you, Kavita. Good morning, all of you. This is Swati. Today, the market is likely to open with a little bit gap up opening, and we're likely to witness some sideways momentum during the day. After the continuous sharp fall of almost by 4 to 5 trading sessions from 26,200 towards to almost 25,000 levels, we have seen a very strong correction. So, as of now, we are likely to witness some sort of a cover up rally from the year onwards. On the technical front, 25,000 is the crucial support levels we are looking forward. As long as it sustains about that level, we are likely to witness some positive momentum in the market. The, for the today intraday purpose, the resistance is placed at 25,100. Any move about that level will see the extension of this positive move towards to 25,170 to 25,250 levels on the high side, whereas the support will for the today intraday purpose is placed at around 24,940. If it doesn't respect that level on the closing basis today, then we are likely to attract more profit booking towards 24,860 levels. So the view is definitely a little bit cautious. We are likely to witness whether the Nifty sustains the 25,000 psychological mark on the today's closing basis or not. If not, then we are likely to witness more profit bookings into the market. Coming towards the bank Nifty, 52,000, 52,340 are the resistance levels we need to keep eye on it, whereas the support is placed at around 51,700, 51,540 levels. Whereas the Fin Nifty, for today intraday purpose, the resistance is at around 24,000, 24,140, whereas the support is placed at around 23,640 and 23,470 level. That's it from my end. I request Nilo to take a call forward.
Yeah, thank you, Swati. On the derivative front, see the PCR has fallen quite considerably with the last week, a huge fall, about the 1300 point fall for Nifty. So definitely you'd see PCR coming down. It is now near the oversold zone and likely to reverse. Also 25,000 put holds the highest put base, which is a support level. So we expect some buying to come in from 25,000. Also 50-day moving average is around the same area. However, the cost of carry is very high, and once that comes down, we'll see further buying coming in. Until then, probably some sideways momentum might take shape. India VIX is still at comfortable levels, even though it has moved up from 11 to 14. It is still at comfortable levels. Below 15, anything below 15 is good. So nothing to worry there. So at this point of time, we expect Nifty to oscillate in between 25,000 levels to about 25,500 levels, which is a resistance zone. From the stock specific front, some of the stocks, in fact, most of the stocks witness some selling pressure. We expect buying to resume in sugar stocks. So, especially Balrampur Chini can do well. It did witness some long unwinding in Friday's trading session, but we expect some buying to come in good open interest is seen in this stock. Longs have been bit up. Also, banking, which has been seeing selling for quite some time, can resume its buying now. We can expect some short covering action in this index as well. So yeah, so that's it from my side. Like to ask the fundamental team to take over, please.
Good morning. So on the business front, Adani Wilmar Limited posted the business update for the quarter two. On a standalone basis, it has observed volume growth of 10% and 16% growth in net sales. The company's edible oil and food and FMCG segments has done well, where the oil volume growth reported at around 15% with a sales growth of 20%. And food and FMCG segment has posted the volume growth of 31%, which was 15% in the same quarter last year, and sales grew by 36%. Company continues to increase its contribution to overall sales from 18% to 21% in the last quarter. During the quarter, edible segment contributed 60% to the sales volume. Industry essentials volume degrew by 16% on a YY basis, with sales decline of 10%. The stock is trading at 73 times 2 TTM EPS, and the update is positive for the company. Kalyan Jewellers Limited posted the business update. Consolidated revenue grew by 37% on a YY basis. India business grew by 39%, where the triple SG of approximately 23%. It has opened 15 FOCO stores in India during the quarter. In the Middle East, revenue grew by 24%, that contributed 13% of the overall revenue. The company plans to launch another 25 showrooms in India and 18 Candia showrooms and the first showroom in the US by Diwali. It has guided for 130 new showrooms for FY25, of which 51 stores are already open. The stock is trading at 60 times to FY26 EPS, and the update is positive for the company. On the result front, the recently listed company PN Gadgil Jewellers has posted the result for the June quarter. Revenue grew by 33% on a YY basis, and EBITDA margin reported at 3.9% versus 3.5% in the same quarter last year. The stock is trading at 63 times to TTM EPS. Thank you.
Yeah. So Sami Hotel has announced an acquisition in Bangalore. It is acquiring Inmar Tourism and Hotels, which has around 142 rooms. And in addition, in the second phase, they would also add some 200 to 220 rooms as well. So the purchase consideration for this acquisition is at 205 crores on a EV basis. It's a marginal positive for Sami Hotel. And that's it from us. I would request Harshal to take forward the call. Thank you.
Yes, thank you, Kavita. Good morning, everyone. So in today's session, we might witness a pullback in gold and silver. So gold, one can initiate a buy around 76,000 and maintain a stop loss of 75,700. And on pullback, we are expecting 76,400 to 600 level on the upside. So profit taking is advisable on the higher end. Whereas silver, we are recommending to buy around 92,700 with a stop loss of 92,000. And on upside, again, 93,500, 94,000, one can book profits. In crude oil, we are expecting a bit gap down opening around 6,200. So it can test around 6,150 on the downside, and one can initiate a buy again for a pullback and maintaining a stop loss of 6,050. On upside, again, 60,250, 6,300 is the level where one should book profits. And in natural gas also, we are expecting prices to test 235, 232 on the downside. So sell around 245 with a stop loss of 252. And again on downside, 232, 230, one can initiate a buy with a stop loss of 225. In metals, copper, we might see a range bound movement from 850 to 860. So one can initiate a buy around 850 to 851 with a stop loss of 847. Below 847, we expect prices to correct further. So be cautious below 847. And again, for trading purpose, one can initiate a sell around 860 with a stop loss of 865. Um, and zinc might test 290, 291 levels on the upside. So buying around 287, 286.50 is recommended with a stop loss of 285.50. Whereas profit taking is expected from 290 levels. So remain cautious if prices are sustaining below 290. That's it from us. Thank you very much.